Hi, everyone. Thank you for joining us for this special episode of BuiltWorlds Conversations, where today I'm sitting down with VoLo Earth Ventures COO and partner, Elaine Hsieh, who will be speaking at our upcoming Venture West conference in San Francisco. Elaine has had an absolutely storied career that has included roles at the U.S. Department of Energy's Loan Program Office, the U.S. Undersecretary for Infrastructure, the U.S. Green Building Council, RMI, Generate Capital, the Green Biz Group, a third derivative of which she was also a co-founder, and that's just to name a few. Today, Elaine joins us to discuss investing in sustainable technologies. Elaine, thank you so much for taking the time to be here today.
It's great to be here. Thanks so much, James.
Excellent. And I should give out a special shout out. It is your birthday, so happy birthday.
Woo-woo.
Thank you for that. So if you're all right, I'll just jump right into the questions.
Sounds great.
Perfect. So let's kick us off with, if you can, give us a brief summary of sort of the recent history of venture trends in that sustainable climate tech space.
Over the past 5 to 7 years, climate tech has moved from being a niche category to a core part of venture investing. In 2019, the IPCC published these special reports, making pretty clear that we can't just adapt our way out of this. Even at 1.5 degrees Celsius, the impacts are really serious. And many systems simply just can't adjust fast enough. So the message was, we need to cut emissions rapidly across energy, buildings, industry, everything. And we've got to deploy at every viable solution at scale. So it was all of the above moment, right? And so then in 2019, because that sort of happened, it changed. This huge surge of interest happened. I would say from 2019 to 2021, there was a huge surge of capital flowing. There were net zero commitments. There were lots of strong optimism around these new technologies. That's when, there was more money going into carbon dioxide removal and a number of other kind of areas that really didn't get that much interest, in addition to all the main categories, in addition to hard tech and hard science, which was a very huge change from the previous years. Then in 2022 and then 2023, I would say there was a reset. Interest rates rose, investors became more disciplined. I would say, what we say at VoLo Earth is the tourists started to leave. It wasn't enough to say this reduces carbon. You had to show a clear path to revenue and scale. And now we're in a much more practical phase, in my opinion. Investors are asking things like, can we actually get this deployed at scale? Does it save money? Can customers adopt it without major disruption? So in the built environment, especially, the focus has shifted from ambitious concepts to solutions that can actually be installed, financed, and repeated. So, overall, I would say the climate tech movement and investing in general has grown up. It's not about these big, bold promises. It's about whether you can actually get something built.
Okay. Well, that's a great segue, actually. I'm glad you brought up the built environment, because specifically in that space, when you think of sustainable innovation, is there anything that's particularly exciting to you, or that seems like it has really shown promise?
Totally. I think there's a lot of exciting things. I'm going to sort of categorize it into 4 specific areas within the built environment. I think it's not about new technology. It's about new delivery models. So, whatever's going to make it easier for solutions to be adopted. So one is industrialized construction. So we're seeing industrialized construction really help in terms of predictability. So it's not just about speed. It's about predictability lowers both cost and emissions. So for example, we have this portfolio company at VoLo Earth called Reframe Systems.
Yeah.
And they're basically rethinking multifamily construction using advanced manufacturing. And that does a bunch of things. It reduces waste, it improves quality and consistency, it shortens construction timelines. And it's not just about this sort of nice add-on, it's built into a more efficient system. So when you reduce material waste and rework, then you get to reduce cost and carbon at the same time. And that's the kind of model that we're excited about, right? Sustainability as operational improvement. There's another area that I think is really exciting, which is low carbon and circular materials. So, I think the kind of historical thing is that embodied carbon was a reporting issue. And it's really become much more of a procurement issue now. I think the supply chain for building materials, it just hasn't changed much in decades. So when you introduce transparency and circularity, you're going to unlock both margin and sustainability. So I think waste in construction is just mispriced material. We have a portfolio company called Cambium. This is a great example here, which is that they use technology to reclaim and redistribute wood that would otherwise go to waste. So it's, waste wood basically, and also just wood in general, but it creates this transparent supply chain for salvaged lumber. So it basically is reducing embodied carbon. It gives architects and builders verified data, and it turns waste into a valuable input. So we're seeing there's a lot of interest in this because, owners are starting to pay attention, not just to operational emissions, but to carbon embedded in what they build. So that's really helpful. And then another one I think is building cooling and energy flexibility. So, obviously, cooling is like one of the fastest growing loads on the grid. So making it more efficient is like better for climate and also infrastructure, frankly. Blue Frontier is a really amazing company that is tackling this with ultra efficient air conditioning systems. They're based in Florida. It's getting hotter and they actually get more efficient, like up to 90% more efficient. And that just cuts not just energy use, but also peak load, because they use this technology that basically shifts peak load and acts as a storage without a battery. So the cooling is driving some of these like expensive grid peaks, but more efficient systems are reducing operating costs. And then the buildings are starting to behave more like a grid asset, right? So it's like flexible, responsive, and it's also less resource intensive. So the utility likes that. And it's more affordable energy because it's more efficient. So basically the point is that it's a climate solution that solves a really important economic problems. And I think that's really cool, where you can have leverage what used to just be old-fashioned HVAC, and you have this complete unlock of a business model that is also helping alleviate the grid. In addition, I would say integrated electrified homes. I think the easiest way to decarbonize is obviously to design it from day one. We talk about this all the time in the built environment. We've got this company called Zero Homes, which, is basically designing from the ground up to be electric efficient and resilient. So instead of retrofitting piece by piece, you're designing smarter from the start. So high performance envelopes, efficient HVAC, smart integration. You're going to get lower utility bills. You're going to get better performance, and then you're not even asking the homeowner to become an energy expert. So those are really interesting and exciting areas, I would say. Yeah.
So you brought up some interesting ones, industrialized construction, reclamation of wood, which in some ways has been around. And I think there's a lot of like innovation happening in that space. But I'll be frank, like I've been in the room with, I don't want to name names here necessarily, but some big name contractors who, whether or not what their personal opinions are about sustainability, when it comes down to the business side of their reasoning, it is very much, hey, if I can't demonstrate an immediate ROI on these sort of sustainable technologies, as great as they may be, we're not going to invest in any significant way in them. On your side, I mean, working with a lot of these companies, I'm sure you understand a little bit of at least the interaction between them and who they're selling to, which is, I imagine, a lot of contractors. Have they run into that mindset of show me on paper where I'm saving money or something similar? And is that a challenge these days, or is it something we're moving past? If you could talk a little bit about that.
Yeah, I mean, totally 100% agree. That mindset definitely exists, and it's totally understandable, right? I mean, construction is a low margin, risk sensitive industry. So if you introduce something new, contractors are going to worry about delays, cost overruns, performance uncertainty. I've definitely been in the room and in the field with a lot of GCs who are like, what the heck is this? This is not something I'm familiar with, and right. Yeah. So unless there's a clear proven ROI, hesitation is absolutely natural. So the real issue to me is alignment, right? Contractors don't always benefit from long-term energy savings. Owners may not may want sustainability, but still default to lowest upfront cost. I would say benefits like resilience or tenant health are harder to quantify. There's a lot that is like, how are we going to score that? And so I think the startups that succeed, including several of ours that I was talking about, that they frame sustainability as lowering operating costs, faster construction, better asset value, reduced risk, right? So when sustainability is aligning with cost, schedule, asset performance, adoption accelerates, right? So, I think in this industry, sustainability is going to scale only pretty much when it reduces risk or improves margins.
No,
And so that's kind of where you're picking the winners, right? You're kind of looking at like, where is their inability to make these solutions de-risk the execution to make them bankable faster. You have to be able to understand and empathize with those who are actually going to be using it in the field, right? So the earlier that you can really understand, and frankly, a lot of the teams that are part of these solutions came from construction or are from construction. So they're just like, this is the pain I'm suffering, and it's not going to work if it doesn't do all these things that matter to me on a short-term standpoint.
Yeah. Well, you guys work with a lot of pre-seed, early stage kind of companies in this field.
Yeah.
Do a lot of them come in with that sort of understanding of like, I need to generate, or I need to demonstrate like where they're going to save money, or align with the sort of pain points of contractors? Or is it something you need to work with a lot of startups on? I know you mentioned a lot of them come from construction, so maybe that's an answer in and of itself, but maybe if you could share a little bit about that.
Well, I think when you're investing at an early stage, there are only certain kinds of things that are more quantifiable, right? Because, a lot of it is still in concept stage, still getting validated, maybe they don't have the CapEx to actually build the factory yet. So there's a lot of stuff that still needs to get proven out from a pure data standpoint, right? You're taking more risk when you're an early stage investor. But one thing that you can really evaluate is team, right? So you're looking at the founders, you're looking at the people who are going to be actually building the thing, and you're going to be looking also at a number of other factors that are, related to unit economics and kind of relationships, people, the kinds of network that they have around them, and the strategics that might be at the table to sort of provide offtake, who have at least some letters of intent or potential joint development agreements, or things where they're talking to the right players in the industry to inform their solution, and they bring to the table some experience and some seasoning as an entrepreneur to really understand how to build something in the real world. It's not like a software as a service thing. You're not building an app, right? This is where Clean Tech 1.0 kind of failed, which is that a lot of investors who did really well with software solutions just didn't understand the liability and the risk and the regulatory issues and a lot of the other kinds of things that you have to really understand by being a person who's been in the real world building things. How do you de-risk those things? How do you actually, what are the timeframes or the expectations, the returns that you can get with something that is, actually like a physical thing, a hard tech or high, a lot of these kind of areas where, we're investing are slow in terms of commercial adoption typically. Okay. So what are the things that you can invest in that essentially can scale up a little bit faster because you're de-risking a lot of aspects of execution, whether they be the experience of the team, the fact that you're taking over a pre-existing factory that was abandoned, that you can leverage the materials that are already there. You have resources based off of some strategic partner that's already involved. There's a lot that de-risks a solution that makes it like less CapEx intensive and can be able to execute more quickly and scale up because of all of these different ecosystem players and resources that are available.
Oh, of course.
From that standpoint, it's very pragmatic.
Yeah, no, that makes a lot of sense. If I could change gears just a little bit,
Sure.
I did kind of allude earlier that you've worked in government quite a bit. You were previously a senior advisor to both Undersecretary of Energy for Infrastructure Kathleen Hogan, I believe, for a short time, and David Crane as well. And you helped them kind of amplify private sector investment and clean energy markets. During that time, I'm curious, what were the driving priorities at that level that guided, how you were deploying grants, loans, whatever the case may be?
Yeah, I mean, that was a really great experience. As you may recall, there was the passage of the bipartisan infrastructure law, also known as the Build Better Act, IIJA, Green New Deal, whatever you want to call it. And that sort of restructured the Department of Energy because it gave us a lot of resources to not just modernize existing infrastructure, but also build out clean energy infrastructure, which really needed a push. They needed more incentives. So it gave us billions of non-dilutive funding to be able to commercialize new clean energy infrastructure projects. And then in addition, there was the CHIPS Act, and then there was the Inflation Reduction Act. So all of those three in succession sort of were additional to each other. And then all of a sudden, Department of Energy had all of this need for people who understood how to commercialize these kinds of infrastructure projects. And so the DOE had these guiding principles when we started setting up all these commercialization offices to really scale and have catalytic impact, right? With all of these grants and tax incentives and everything, right? And loans, et cetera. So we were looking at things like, where can public capital unlock private capital, right? We needed to turn our billions into trillions in order to actually really get these markets moving, right? What technologies are ready to move from pilot to deployment? How do we strengthen infrastructure and resilience? How do we create jobs? How do we strengthen supply chains? Like, there were so many things that we were doing that everything we did, frankly, was market driven. It had nothing to do with ideology in the administration when I was there. It was really more around how do we take all of these resources to be able to really get the US moving in the direction that we needed to, and also, not destroy the planet, right?
Yeah,
So,
exactly.
it wasn't about innovation, it was about deployment at scale. Like, we literally needed to get these things built, right? Real factories, real jobs, real community benefits. And, there were a lot of other communities that were not, were kind of being left behind. So it was like, how do you get those folks in and really help the economy for them and give them access and affordability? So interestingly, then at VoLo, the mindset is absolutely similar, where it's like, can this solution realistically scale in the real world, right? Does it improve economics for customers? Is there a pathway to broad adoption? The difference is that in venture, we can take earlier risks, but we still need to have a believable path to execution. So one of the things that I recently said is just, bankability starts really early now, right? Starts at seed. Innovation's easy, deployment is hard. So the winners figure out permitting, procurement, financing. It's not just like product, right? So at scale, climate solutions have to work in the real world. And so you've got real contractors, you've got real schedules, you've got real budgets. You really have to be able to kind of look at what is deployment, what do you need to set it up such that you can actually scale up from a deployment standpoint.
Were there any, it sounds like there's a lot of alignment in terms of like how you would use money at that sort of government level and how you use it at VoLo. Are there any big differences where you kind of had to adjust moving to VoLo?
Well, it's totally different capital stack, right? So at the Department of Energy, we had non-dilutive funding, and we were funding things that you're not taking technology risk, really. You're really trying to create markets, right? So that means we have to make sure that, there is a demand for the kinds of things that need to get built, and that there is enough supply, and the people who are going to be storing it and transporting it, and all, there's a whole ecosystem that's getting built to be able to do that. You also want to play well with your geopolitical allies, because many of them want to be taking advantage of your tax incentives and your other incentives that are at the table too. So you get, OEMs from Europe or Japan or wherever being like, I didn't really think about building in the United States, but now I want to build my automotive factory in Pennsylvania or, West Virginia, or I want to come in and how do I find the right location to do that? And which tax incentives build on which, and, so you're sort of looking at a lot of larger infrastructure plays with foreign direct investments, and you're looking at global supply chains, you're looking at certain kinds of volatility, but you're also looking at where there are gaps in the market that you can fill as a government mechanism. First venture, which is, equity. So you're, taking a stake of someone's company. It's not about, a single project that's like billions of dollars. It's like this solution and this company and these founders, and they're building this amazing thing that could really change how industry works with multiple benefits, but it's still really early. So you're taking a lot of risk. And you're also really early in terms of execution, and you're just trying to get traction from a commercialization standpoint, much less a deployment standpoint. You're just trying to get people from commercial to expansion. So I'm looking at it from like the opposite end now in venture, which is, early stage, but really like, how do we set them up such that they can then get pulled forward with, growth capital, with kind of non-dilutive, the hybrid stack right now is really cool because it's not just about venture and, your specific returns on, just equity. It's a combination of different sources, including project finance and debt and philanthropic. And there's so many different ways of being able to scale up now. But, with the government, it's way more mature.
So for a sort of final question, and this is also going to be moving in a little bit of a different direction, and it's something you had alluded to earlier, but I'm sorry if you're getting a little bit of whiplash from some of these questions, so we're jumping around a little bit. Okay. But I'm curious because you did mention circular economic principles, and some of that played in with some of the portfolio companies you mentioned. Reclaiming wood is like a really good example of how that might play into it. But I'm curious, and sort of a bigger scale, what role you see circular economic principles playing currently in innovation and investment trends, and how you kind of see that role evolving over the next few years.
Yeah, I love circularity. Frankly, I mean, in the context of your audience, which is construction, AEC. So circularity in construction, to me, it's not about being idealistic. It's about, to me, not throwing away value. Right? Like circularity is becoming less about recycling, where I think typically that's what the dialogue was, because that's where people could tangibly understand circularity. Now it's more about industrial strategy. So I think it's like securing inputs, reducing volatility, meeting carbon constraints, right? So in construction in particular, I think that means like reusing materials, right? So cambium being that example that I previously talked about. Designing buildings for longer life and less waste, tracking material origins and performance. I think right now circular approaches are often adopted by, forward-thinking developers or corporate buyers or people who have more resources or advantage to be able to be thinking about that kind of stuff. I think over the next few years, I expect circularity to be more mainstream because material costs are getting more volatile. Supply chains are more fragile, and embodied carbon disclosure is increasing, right? So you've got a number of different trends here which are helping people understand I need to be looking at different models by which I can insulate myself or align with different kinds of companies that are going to prevent me from getting that kind of exposure, right? So I think circular models reduce risk, reduce waste, reduce cost over time. And again, back to being very pragmatic, it's really like material costs are fluctuating, circular supply chains are going to look like more like smart risk management.
Yeah. And so the concept of circularity, I think people in business, it makes a lot of sense. Like it's a whole new avenue of how to do business in a certain sense. But I'm curious, specific to the AEC side, like the customer, the contractor, but maybe also in general, because I know you guys invest kind of all over the spectrum.
Mm-hmm.
Is that something that's resonating with the people who are deploying and implementing these technologies, just as much as it is with the people who are, starting new businesses, being that innovator? Or is there still that sort of gap between, hearing about circularity and understanding the true benefit of it? Does it resonate with customers right now?
Yeah, I mean, I think what's happening right now, like you've got materials marketplaces plus reuse, you've got product passports and traceability, you have recycled feedstocks, you've got industrial waste valorization. There's like a lot of, I think in the construction, there's like a design for disassembly, prefab components, deconstruction, supply chains. You've got basically embodied carbon is increasingly visible and spec driven, right? As far as I understand. But what's changing, I think, is there are circular shifts from nice to have to procurement and compliance and cost volatility hedges, right? So more owners are going to buy carbon plus cost plus lead time, not just cost, right? They're really looking at that kind of bigger thing. And public purchasing, like I think Buy Clean, I don't know if you've heard of that, and other disclosure norms, those are going to help create standardized demand signals. So basically from a capital formation, also, I think there's more corporate venture participation as industrials are going to chase resource efficiency and supply security. But anyway, the point of what I'm saying is essentially that I don't think that there's a disconnect between, well, it depends on who you're talking to, but the value proposition isn't, hey, look at this circular model. The value proposition is like there's risk mitigation here, right? You're basically, like I was saying, you want to not have to deal with a lot of the risks and waste and cost issues that are occurring because materials costs are fluctuating, because you don't have access to certain kinds of supply chains. There are certain kinds of performance that also is related to materials that are coming from other places. I think there's all you really care about, I think, ultimately, is to make sure that you can have an opportunity to build and also save money and also have high quality, and be able to then, have a market that is going to benefit from, your higher performing material that is affordable, right? So ultimately, circularity feeds into that kind of value proposition. So whether or not you want to call it a circular solution, I don't know anybody who doesn't care about saving money. So that's kind of the value proposition to me, which is, like, I don't know. I think there are lots of opportunities because in a lot of these industries, and it's not even just the built environment, there's been decades and decades of institutional or incumbents doing the same thing.
Yeah.
Right. And so when you have a company that comes in or new concepts that come in that are different, there are going to be buyers who are very skeptical. They're going to want a lot of validation. They're going to want a lot of testing. They're going to just basically be very conservative. And so what can we do as early stage investors and, certain people who are more motivated to take, a bet on something that's earlier stage? How can we start to do things that actually can make it less risky for those who are incumbents? Because what will happen is when you start to see that there are solutions that unlock a better way of doing things and are going to make more money, then more people are going to want to adopt it. It's learning by doing, right? There are so many really cool, sustainable business models out there in the finance world, in, industrials, in the built environment, in energy. that are just unlocking these really new value propositions. And so, it's to me very exciting because that just means we're changing the way that things are being done in a way that makes more sense. It's going to be, less dirty, it's going to be less expensive, but any incumbent that has a stake in what currently exists, they're not going to want to change. So it's really more like, how do you actually prove out enough value in what the new solution is such that it drives a market to demand more of that changed solution?
Awesome. Yeah, of course. Sounds like there's a bright future for climate tech, ultimately.
Yeah, absolutely. Absolutely.
Excellent. Well, that's all the questions I have for today. I would open the floor if you had anything that you wanted to add that we didn't touch on.
No, I mean, I just want to close by basically saying I think the path forward isn't about like adding green features. It's about building better systems, right? So when sustainability improves margins, reduces risk, makes projects more predictable, I think adoption is will stop being ideological and it will start becoming inevitable. And I think that's, what we are investing in, which is this inevitable industry transformation that is happening.
Wow, it gives me hope in a time when we need it. So I really appreciate it.
Of course. Thank you for having us.
If you're interested in hearing more from Elaine, you can catch her at Venture West this March 11th through 12th in San Francisco, where she'll be speaking on the Climate First Construction, Investing in Carbon, Codes, Circularity, and Sustainability panel, sharing the stage with Jesus Ortiz de la Fuente from Cemex Ventures, Jordan Darling from Superseed, Alexander Bent from Undivided Ventures, and Sam Rubin from High Watts. Hope to see you there.